Hey there, traders. Todd here. Welcome to the Wednesday webinar. Let's just check. We're on kind of a new setup here, guys, so it's going to be a little wonky here today. Let's see. Just give me a quick sound check. Trading analysis team,
Yeah.
is it okay on this new kind of setup?
Sounds good to me, Todd.
All right.
Sounds
Members,
good.
traders, how's everyone doing? Happy end of the decade. Can you believe it? What can you do in the next, let's call it 12 days or so to do everything you wanted to accomplish in this decade? It's amazing. All right, good. So, hey, again, I'm kind of moving the office around. We've got to shift around. So this is very much like a makeshift setup. So we'll just kind of show you what's going on from our point of view. Let me bring the team in here. Morning to the illustrious, talented trading analysis team. What's going on, guys? How you doing?
Morning, Todd.
Morning.
YouTube.
All right, you guys know the crew. So we're starting with Terry on that side, Bennett directly above, and then Alex right there. You know the team. So what's going on here, guys? Kind of a quiet end of the year, aside from just a quiet
Market
little
melt up.
Yeah, nice melt higher in the markets.
Not much.
And I find it funny though that the TV analysts are having to just scramble to change their storyline that they've been promoting for the last year. You know, the recession is coming. It's about to fall. Oh.
I know.
And it just, I mean, and their story just kept collapsing and falling apart one by one, and you know, and we're still pushing to new highs. So, but we're pushing gently. The thing, I'm going to tell you one more thing because I know Todd's going to cover a lot of this, but I'm not seeing an exhaustion gap acceleration, which is a good thing in my mind. The market is moving higher slowly, gently, and on pace, right? So I don't see a screaming run to the top and then all hell falls out. So that's a little bit of a piece for what we might be forecasting. So
yeah, that's for sure. Let me just bring this in here, Bennett. What do you think? What's you? I've been quiet purposely. I'm letting the team kind of run. It's been a very busy year, so I'm doing a little bit more family time. So I'm doing a little bit more spectating, watching the team work. In kind of a quiet market, we're long. You know, I continue to hold long positions. I've been bullish throughout much of the year, and it's paid off on the portfolio. Bennett, what are you thinking from your point of view?
You know, I'm in the same boat as Terry. I think at this point we are melting higher in a fashion that's not overdone or overstated, and you know we're moving into such a wide zone of fib that really I don't think trying to call a top on this period of expansion would be wise at this point. I think all signs still point to the upside.
Yeah. Alex, what do you, from your point of view? I know where you stand on the from the FX side of things. Are you still seeing kind of the risk-off kind of message from FX?
Yeah, we didn't change much. Actually, dollar yen is going up a bit, so we are preparing the short entries for our members. I still think that the viable wave count is your 1 and a year half old triangle,
Okay.
and I'm gonna stick to that until I'm proven differently. So I'm
the dollar's been selling off though, right? I mean, we're starting to see dollar push lower. So isn't dollar yen selling off a little bit?
No, it's going up with the S&P.
Oh, okay, got it. And that's the problem with dollar yen. It's perpetually on the wrong side. I always said that back when I was an FX trader. Dollar yen is always most of the time on the wrong side of the dollar trade. To your point, because it's more correlated to equities. If S&P is going up, dollar yen's going up, which means the dollar strengthening against the yen. But if it's truly risk on, we're seeing weakening of the dollar against more commodity-related currencies, and you're seeing a pretty good move up in emerging markets. You're seeing it in copper. You know, FXI is starting to move up. So, so that's kind of confirming the dollar lower story, right?
Yeah, for now, but I'm still very cautiously looking for this one more move lower. I had a wave count on copper, which is also predicting or kind of looking for a one more move more lower. So I guess this will correlate also with S&P.
Okay.
So as you can see, I'm a kind of a underdog in this team because I'm looking all the evidence that the S&P might actually trace out your D wave in the triangle.
Okay.
Or C wave down.
All right, good. So let's pull that in. Let's start looking at some charts here. And again, guys, just kind of pardon us. We're moving stuff around, shuffling, and Bennett's getting ready in the new year to put you on the spot to take over production of VNix. Bennett, before we go, and he's also building an amazing computer. Do you have pictures you can show us before we sign off here today?
Yeah, I can arrange that before we wrap up. But yeah, be careful. You never know. I'll be pressing the buttons in the background, so you never know when you're going to be on screen. Always be ready.
Dude, everyone who's been with us over this first year of our YouTube show, I think I've personally conditioned them to expect anything. So thank you for staying with us. No, I'm telling you, once you get behind this process, it's pretty intense. All right, so let's go. Bennett, and Terry, I am more or less going to open with your work. Again, all of our Elliottwave analysis is synced on the same chart. So am I looking, I believe this is our current count. Is this accurate?
Yeah, as a matter of fact, Alex was doing some work with us on that last week, looking at that possibilities there in green 5.
Okay, perfect. So, all right. So let me just work. That's the intraday. Let me go. Let's start from the daily. Actually, let's even start big picture as we're at the end of the year. Kind of recap where we've been. The two main counts that we're looking at. The fact that 2018 saw the same price all the way into October 2019. So you're talking a year and a half of price action before we just finally start to see the move up. And I still think that this move is still very hated. Everyone's saying this bull market has gotten very extended, and I laugh at that. I've spoken to several people. In fact, I had a call with a money management firm, and I'm even seeing caution there. And I just think from a technical point of view, when the market has been under such tight constraints, such tight ranges, with so much how do I say it, so much negative commentary, so much negative sentiment trying to convince us of imminent recession and political risks, the market does the opposite and breaks to new highs. I mean, I think this is just getting started. As I said, I've allocated more money to my portfolio. I'll show you my entire let me be a little protective here. I don't want to give everything away, which is fine. I gotta have some secrecy. I can't have full 100%. I've allocated more money to some simple SPY, XLK, and QQQ just to get something on, frankly. I've been working through some portfolio stuff with Terry that we'll have for our members. But I've got pretty good sizable long positions on that just continue to go. I don't want to be missing out on this rally. I think we can continue through into January. I think there's been no impact on the political front. I don't think the impeachment inquiries are going to change anyone's voting decision whatsoever. I think everyone knows the country is incredibly divided. It's a very politically driven impeachment process. Whether there's merit there or not, I'll let you decide. My point is, I don't think it's going to change anyone's approach in November, although we have 11 months to go. So I think the Fed's very much out of the way. I think the economy has been showing some pretty good numbers. We saw really strong non-farm payroll. Manufacturing's been a bit of concern, but for me, there's nothing that changes. Plus, we've just been going nowhere for a year and a half. We've just finally broken out, and the Russell hasn't even broken out. So the two main counts that we're looking at here, guys, are right here. Okay, so Alex was mentioning this is a count that we've been looking at for a long time, which is a running triangle, which means B wave goes to new high. We have C down, D up, E down, basically sideways through 2020 and even into 2021. This is the first count. Alex is still favoring this, and it very much could be the case, though I would start to say B wave's getting a little extended relative to A. So if we do ratio analysis, B and A, we're through the 1272, which is always a little bit of a concern. If we get through the 1618, which would be amazing to get up to 3382, that would really start to invalidate or call into question this being a B wave. So we're in between the 127% extension of A and 1618. So this is the zone we got to focus on. If we do start to fail, then we get on and C. The other count that we're looking at is this one. And this is one that we've brought to the Elliottwave community, I believe back in October. Is that right, team? And it started with Apple. I'm going to put you guys on the spot. Do you guys remember approximately when we first brought this up?
I believe it was November. We started to look at that possible interpretation in Apple. And then it was early October that we started applying it in the NASDAQ.
Did you say November or September?
I believe it might have been October and November.
Okay. So we started looking
I have to go back and look.
Yeah. We originally put this count out in the middle of October, and it came from Apple. And if you guys remember, those of you who've been following this show, this Apple, I think, has been incredibly important for obvious reasons, being that it's leading the market higher. But the fact that this correction, this 2018 and 19 correction, was very hard to explain. Mm-hmm. And we kind of worked through it, and he said, possibility is we have a Y wave triangle. And we started to sort of look at this in September and October. And then what we did is we took Apple and applied it to the NASDAQ, and then we realized we could apply it to the Dow and the S&P. So it kind of started here. And what's interesting is if this count is accurate in Apple, Alex's concern is warranted, number one, because we might be set once this amazing run in Apple happens through and exhausts 280, 290. We've got channel resistance in a 310. So somewhere in this little zone, we will have to answer to the end of wave 3, giving way to wave 4 that squares up with this wave 2 that was in 2012 and 13, which this was a pretty sizable 45% drop. So that doesn't mean we're going to see a 45% drop. You might see, half of that and just do a sideways kind of consolidation. So I think the key to the market right now is Apple, and it's the first market that put us on this path. Wave force can be anything. It can be triangles, can be flats. Not likely to be a zigzag due to the guideline of alternation. It could be a combination. It could be just a sloppy mess around 300, 250 on the downside, maybe 330 on the upside. We could just be contained in here for the next year or two. And that would be pretty tricky, but we won't be surprised. So back to the NASDAQ, let's go back to the S&P.
And hey, Todd, it was actually mid-August that we came up with that count for Apple. I was just looking back.
Really?
Yeah.
Okay, thank you. So that was August. What was the S&P doing? Oh, that's interesting. You couldn't. Oh, you know what, Bennett? You couldn't. Well, I guess you could call that complete here. And I think we looked at calling this the end of the triangle, this little consolidation in August, but then the triangle continued. So Apple was like 2 or 3 months early giving you the count, which was really the key, I think, to the market. And then we're starting to move up.
Yeah, I remember that. Trying to fit that triangle in there horizontally. And I yeah, it fits, but I wasn't sold on it. But then after the next month's worth of price movement, it certainly it has the right look, and it looks a lot better. So.
It's such a funky consolidation. I mean, if you look at it doesn't look like if you're dangerous but enjoying Elliottwave. If you're kind of an intermediate Elliottwave analyst, I think it's really hard to pull this out. It was a tricky one to count, and in real time, it was very tricky. But the point remains, for imminent recession and money managers scaling back positions massively. And the other thing that we mentioned last week, and this continues to go. Where is my indicator screen? Everything just blew up this morning. I doubt I'm going to be able to find it. Vol skew is interesting. People were talking about recession feverishly, but not really putting their money where their mouth was with vol-skew. Excuse me, and we're finally starting to see it. So if you check out the skew here, this indicator began to move up. And what this is a measure of plus and minus 2 standard deviation options on the indexes. So when people are paying for tail risk protection, which is generally out at the 2 standard deviation levels, plus and minus 2, that's when you start to say that people are starting to hedge what may happen next year. Vol-skew was quiet through all of 18. We got down into the end of 18. There we are in 19. We're big time in consolidation. Vol-skew is not going anywhere. The lower this indicator is, the less people are putting a bid into plus 2 minus, I should call it plus 2 standard deviation put option. So it's measuring the relative expensiveness of out of the money puts and calls to just basically hedge an outsized move. It wasn't going anywhere. We've just finally broken out here over the last couple weeks in vol-skew. And what's interesting is when vol-skew gets up around 140, 150, generally that means the market has gotten too bearish. You get 154 reading back in 2017, the market rips. You get a couple spikes here, a couple spikes here, you get a little bit of sell-off, but then we make new high. This was a pretty ominous signal right here in 2000, end of 18, but the point is people are really starting to pay for the out of the money put protection, and the bearishness that we saw and like that Barron's poll that stuck out to me, 30% of money managers were bullish and record outflows, unbelievable in terms of active managers taking money out of the market, and just continues to be a passive index driven investment, which I frankly don't see as a problem. If the short term money is moving out, well, fine. If the market continues to be driven higher by passive investors, then that short-term money is going to have to get back in. It's not unlike a short selling the market and people are like, oh, those shorts are hurting the market. Well, if the underlying fundamentals are strong, they're going to have to cover that short, which creates buying pressure and pushes the market even higher. So I have no problem with it. So anyways, I'm bullish. Back to the S&P, where we are now. I do think we're in the midst of green 5. Green 5, this has been my standing target on CNBC. I gave it a couple months ago to Melissa Lee on Fast Money. I was like, I think 4,000 is going to be the upside target. I can't give you an exact time frame, but it should be over the next 2 years or so. And that's just simply the path that we're looking at. Just simply a nice 5-wave move post complex WXY, with Y being a triangle, up in 1, down in 2, up in 3, 4, 5. We've been on this for months. So that's the path. In the near term, Bennett, do you want to kind of take it over? And we didn't launch GoToWebinar. Terry.
Yeah, we're working on it. We're doing it in the background. Yeah, we forgot that we were busy doing other things.
Come on, team. End of year bonuses are being written up right now.
Well, on that note, Bennett is ready and you're not. So
yeah. My bonus is gonna fall flat. Here, I'm launching it right now. I'll have Bennett take you guys through the short term here. So New Year's resolution is to have a airtight, fully functioning live stream. Okay. Bennett, you are live, sir.
All right, guys. So we've been bringing a few tickers at you, throughout the weeks, just stocks that are looking constructive to the upside. This is actually Starbucks, a chart that Todd's tracking.
I was going to have you just, I left off on the daily. Can you just kind of drill down to the intraday and S&P and just pick up from there, and then you can roll into equities? Yeah.
All right. So coming out of this wave 4 in the S&P, which, initially we were a bit hesitant to label and anchor that wave 4 there for a couple of reasons. If you take into consideration the guideline of alternation, we essentially had the same corrective pattern, that being a zigzag demonstrated in both 2 and 4, which is pretty unusual. More often than not, you're going to see a zigzag in a wave 2 position and a wave 4 that follows neither the form of a triangle, a flat, or even a complex. So following that, we had actually an initial 3-wave move higher, which ran into resistance at equality of this initial leg and this leg. So it was a bit of a measured move, which initially was looking like it was possibly indicative of a three-wave move back to the upside. We then had news coming out regarding progress between the United States and China on the trade front, and the market started pushing higher. So Alex, Terry, and myself were doing some work here looking at a possible series of 1-2-1-2s that resolved into a nice third of a third that is now being met with a period of consolidation over the past couple of days. So we had the gap up on Monday following the housing data. We've just kind of been sideways and consolidating. From an Elliottwave standpoint, you could get a 5-wave completion here with an ending diagonal in the 5th. But that said, given how far this market has come and given the strength that we've been seeing, I don't think it would be wise to just say this is the end of this initial 5-wave move, whether it's going to
Yeah, Bennett, I saw we had that. We kind of had that anchored there briefly, and I think you and I had that discussion, and I'm like, it just looks too short, So, and especially with that gap that we were seeing, the gap movements, I said, this doesn't look like that's the end. Now, we could still be proven wrong because we still got to make that next new all-time high there. But I think you and I both agreed that this needed to be, we needed to have a more extended wave count. So.
Yeah, absolutely. And at this point, we have met equality of 5 and 1. We've actually surpassed that. I think we're possibly entering consolidation in 4 of 3 here, with still upside left to come into the end of the year and into January. So I wouldn't be too quick to call this complete. We do have the upper end of this Elliottwave trend channel offered from the green minor degree completion of 2 and 4 over the top of 3. So while we are getting into a fairly thick zone, I still think there's upside left to go.
Nice. So take us into some of the equities you were looking at.
Yeah, absolutely. So let's take a quick look at a few names that are looking strong. Starbucks, this is actually one that you've been tracking for quite some time. Had a nice 4th wave right into a 38.2% retracement of the wave 3 advance, very common 4th wave retracement target. And we've had a nice move out of that zone, 81 all the way up to the 88 handle. So that's a name I have my eyes on. Taking a look at this on the weekly chart, you can see the wave 2 that we're squaring this up against.
Yep.
Taking you off to Alibaba, this is another one that we've been bringing to you guys for several weeks, looking for this post-triangle divergence from the 160 handle. We're all the way up to 208. Getting a little overextended within this initial impulse. That said, if I get you off the daily down to the half-day chart, beautiful 1-2, nice extended third, wave 4 demonstrating equality to 2, just shy of a 38% retracement, and now we're honing in on equality of 5 and 1. We do have an extended 5th there. I'm looking for a 3-wave retracement to put on a position for wave 3 of the higher degree 5th. So I think implications are still higher there in Alibaba, and especially if we continue to see progress on the trade front.
And let me just say something quick. Like, even though Bennett just said we have an extended 5th, it's been such an amazing consolidation followed by a breakout. Notice we're not saying we're going to short it. We are only waiting to buy a pullback should it happen. But Bennett, would it break your heart if perhaps our primary account is wrong and Alibaba just keeps going?
Absolutely not. This could absolutely get more fractal and continue higher. So,
and that's a key point that I want to make. I mean, we trade to make money. We don't, we're not trying to be right to show our academic prowess. So please continue.
Definitely, excellent point. And then AMD, we know.
I agree. He just said Bennett's such a good addition to the team.
I appreciate it, Luke. Thank you. Let's see. Lulu actually had pretty decent earnings report. I think guidance was in line as well. Excuse me.
Yeah.
Bit of a bearish reaction coming off of the event, though. And if we take a step back, this is one we talked about, the fact that it's really such a new name. I mean, even going back to 2009. Is it possible that this was simply another 1-2 and this stock is ready to explode higher? Absolutely. Getting out the weekly and down to the daily, I think this is a pullback that will actually be a buying opportunity, provided we get an appropriate 4th wave corrective pattern. but I still think implications would be to the upside. I believe you still have this one in your portfolio.
I don't think I'm ever going to sell this. Like, just talk to some girls, guys. Ask them about Lulu. Like, I'm telling you, my wife, she just can't stop talking about it. The girls love the way the material. They love the way this stuff fits. Even guys, you know, you can actually wear Lulu. Like, I'm talking to, we have a girl who helps us around the house. She's 20. She says all the girls love it. My wife loves it, who's in a different age bracket. I mean, just doing some real crude kind of research out there. This company just continues to, which seems like it's such a commodity. It's clothing. I mean, it's so easily replicated. But watch that one. And the other one I do want to get to is Peloton. I have it on my side, Bennett. Do you have?
Yeah, go ahead. I don't. If you want to take over, Johnson & Johnson, real quick, just to wrap it up.
Yeah, go ahead. No, finish up.
We're breaking over this contracting trend line offered from the Wave 4 triangle. This is one we were looking at support into 126, 127. We're back to 143. So excellent move there as well.
Yeah, for sure. And were you going to, while I'm setting up Peloton, were you going to say anything about AMD before I interrupted you?
Just that it's a beast.
Mm-hmm.
And I just can't keep myself from talking about this. I can't get over the open interest. I've said it a bunch of times. They've got, like, last I checked, 54,000 on the open interest on the call side at the Jan 2021 call strike. 50% above current price. There's a massive open interest in AMD as we're trading 42.
Yeah, at the 65 handle, there's 54,000 in open interest. Which
pales in comparison to any open interest, even in the front month contracts.
Yep.
So, you know what? Keep going, because I don't think my charts want to work this morning. PTO.
Hey, speaking of, did you guys hear 50 Cent VIX Trader's back?
Yeah, he's back.
He is back in action.
What does that mean?
I'll send you an article when we wrap up.
Oh no! Is this going to be a VIX blow up story?
No,
there is a guy. Yeah,
go ahead.
Okay, you can, please.
No, please, Alex, go ahead.
Yeah, there is actually a guy which are called 50 cents because he puts a VIX 2 months expiring 50 cent worth of options, in a crazy amount, and he actually did that before 2018. I have read somewhere he will start moving long in these options around September. He lost about 100 million, and on 2018 he
really
something like 250 million.
Oh my God!
He was
how do I not know this? I don't know anything about this.
He made it back up at the end of 2018, but he hit it yesterday, the January 22 call strike. I think 110,000 of them or so at 50 cents.
Oh my God.
Yeah, 50 cents is smelling something.
I must have been in a cave. That's unbelievable. All right. So let me see here. Let me just, for some reason, my quotes are not really working that well. One thing I do want to add that I think will pop up here. XLY has been in consolidation. And Terry, do you want to do some relative rotation, or do you want to turn it over to Alex?
Yeah, I can do that real quick.
Okay, perfect. One thing I would watch, speaking of, it's kind of a segue into into Terry's bit, is XLY has been extremely quiet. It's been in a triangle which I think we might actually need to sort of extend that triangle. It's not unlike oh, no, that's right. That can't happen. We've got to do that. So this has got to be 1 and this has got to be 2. Hasn't yet broken for 2 particular reasons. Obviously, 2 big holdings in XLY consumer discretionary would be Amazon and Home Depot. This guy, I think, is set to make a little bit of a comeback. Home Depot took a big drop after earnings in November. I think it's the second biggest holding within XLY.
Right.
They had some talk about some margin pressures. They're doing a big overhaul to their online business. Like, you can buy stuff and then pick it up in lockers. So they're doing a lot with that. Their earnings were not that bad. They missed expectations. It's been a nice pullback in Wave 4. So that's a big reason. I am going to add this to my stock portfolio with our members in Home Depot. I like the pullback into Wave 4 here. moving higher. And then, of course, the other big one in XLY is, of course, Amazon. Amazon has a very similar kind of pattern, and we can do this. We're using this WXY consolidation correction to explain much of the consolidation over the last 2 years in many of the markets. So also, Amazon is about ready. If we can start to hold the 1700, I think we can continue and follow the rest of the market higher. That'd be really nice if consumer discretionary wants to kind of join the party. So watch that. I mean, obviously XLK has been a monster. Technology is in fact melting higher. XLK more so than QQQ because the Qs don't have all technology in it, whereas the XLK does. So watch semis, watch XLK. That's what's driving the market. And you know we spoke about Apple earlier. Okay, so let's bring Terry in, and he will show us this great tool that we've been using, relative rotation.
Yeah, we can continue talking about that, Todd. So we're looking at the weekly chart time frame here on the relative rotations. XLY is uncharacteristically been following our defensive sectors, real estate, utilities, and staples down into the lagging quadrant, and typically XLY is not one of the gangs. You'll have to excuse, I get some stupid announcements from another server there. But here's XLK. So the only three sectors that we clearly see currently is healthcare, financials, and technology sitting up in our leading quadrant. Industrials has been kind of weak. It's there, but again, it's anything around the center here is effectively operating with the same relative strength and momentum as the S&P index. So there's not really any reason to invest in something separately here. You might as well just buy the index. But when we start to see pushes outside of this 2 standard deviation filter, and certainly I like the direction.
Great.
I like the heading that healthcare, but I will caution we need to time this better with our Elliottwave. Take a look at our Elliottwave, because if I zoom in on our daily, let me grab this and make this bigger. This is the daily rotation. You can see healthcare is down into the weakening with a 45-degree angle heading at 235 degrees. So that means in terms of momentum is currently lower than the S&P, and its relative strength is dropping back towards the S&P. So I would be tentative. I would be careful. I would certainly have some healthcare stocks on our watch list, but let's be cognizant of the time frame. We want to watch this rotation in near term, and maybe when that guy makes a slight turn to the west, and possibly it's very likely that the rotation reverses from the weakening back up into the leading. So rotations do not always have to go all the way outside. You can see from here.
Look at the date, though, Terry. I think this is such a volatile.
This is November 21st.
Yeah, this is such a volatile series on this daily. The more we're using this, I think a pullback into the weakening to lagging 1 week to the next, relative to a very strong weekly relative rotation, is a good thing. That serves as an entry, I think.
Exactly. But that's exactly what I'm saying, Todd.
Yeah.
But the entry point will be more likely when this rotation starts to turn to the west, because I do believe that because of the strength we're seeing in our weekly charts. Let me go back to that. Because of how strong we are seeing it up here in the weekly, we're going to stay in this leading quadrant for quite a period of time. Okay, so that rotation up into the leading is for these guys is going to be here for quite a while. So exactly, I think that's what we're looking at, using that daily a little bit more for timing and the weekly for consideration. Yep. Here is your XLY. And I don't think I have all of them turned on. Let's turn all of them on. Here is the XLY that Todd was just talking about. We're on the daily. Let's make this the weekly and scale it to fit. So we've got we've got quite a cluster. Starbucks, which we mentioned earlier, Starbucks is in the lagging quadrant. It's certainly on our radar list because its heading is starting to move out of the lagging quadrant. It's pointing towards improving. Timing, buy it now?
See,
maybe not. This is why
I think you gotta treat it as partials, right? Maybe thirds. Like we just looked at nice wave for support. That trading analysis as a team, I think 80, whatever, 82 in Starbucks, 80. We identified support at 80 when it was probably extremely weak. So I think the way we're going to work towards this in the new year is you buy a third deep into Elliottwave support. You add when you start getting quadrant movement, right? As it moves and it gains momentum and relative strength of the market, you add to the position.
Right. You can see that, Alex, their Bitcoin is up 2.7%. So
Terry's got a control center over there. He doesn't miss
well,
any bit of incoming information.
Momentum is improving on Starbucks, definitely. So that's one event. And you can see compared to Dollar Tree, I don't know what the hell is happening with Dollar Tree, but Dollar Tree is really Dollar Tree's really suffering. So here's Home Depot. Home Depot's making a race to the lagging quadrant. Dollar General, a lot of those retail sectors are not doing well. So really, Lulu and O'Reilly. There's really nothing
except for MAR
sitting up here in the leading quadrant right now. Okay.
Marriott.
A lot of this stuff is moving. I still like Marriott. Marriott's got a nice vector heading here, Todd. So we rarely ever look at that one. We might have to take a look at this one separately.
I have an important question, Terry. What is your vector, Victor?
I remember that from Airplane, but I can't remember the response to that.
The only proper response is looks like I picked the wrong day to quit sniffing glue.
Oh, okay.
do XLK quickly, and then let's bring Alex in. I want to see what's leading in technology.
Well, you know what's leading in technology. It's the
semis,
chips. The semiconductors. But look, they've all rolled over.
They're starting to roll over, yeah.
They're rolling over. They're still in the leading quadrant. That doesn't mean
I have a ton of NVIDIA. I mean, I have a good amount of Apple. Right now, I'm looking at writing calls aggressively against them because of this kind of shift lower. And I'm wondering if we start to see rotation in discretionary, because in the last one, you started to see Amazon. We didn't talk about Amazon was actually starting to look better. But we're starting to see the tech play led by chips is starting to be played out. So I want to start, try to generate see if I can lower my cost basis here.
Yeah, Adobe should be on our list for sure. And PayPal, I think you and I were looking at that. Here's CRM. CRM is still creeping slowly towards the leading quadrant.
PayPal looks great.
Yet.
Bennett
Microsoft is definitely a good one too. So Microsoft has moved vertically out of the weakening quadrant right back in solidly into the leading quadrant.
So let me just throw these up quick. I'm just going to show you the charts. Bennett came up with CRM, which I think looks great. Bennett served that up for me for a CNBC video. Let me just see if I can fit this screen in here. All right, no Elliottwave on this. Just simple CRM, extremely low implied volatility. Indicator starting to turn up. Breakout through 164 would be great. And then PayPal also looks good. Again, same thing, starting to move up to this 110 region. So I think both of those look really good.
Here's the semiconductor industry segment of the XLK, and here's our beloved AMD.
Yep.
AMD has just been, like you said, a beast. Bending over slightly here in the near term, so I would imagine in the daily there's a little bit of lack of or loss of forward momentum. But it's while everybody else is heading south, including NVIDIA, Taiwan Semiconductor, Lam Research is taking its time getting out of this leading quadrant. That one there. Look at this.
Oh my God.
Turn all that crap off. So yeah, look at the run that Lam Research had from 125. That was a year ago, right?
More than doubled me.
From a year ago, more than double.
Yeah. Well,
Why,
so
I
is
don't know
AMD.
why we didn't have this on our list.
But we've had
Probably
AMD.
because of
AMD's a
all of
double.
this. Yeah, really, I would look at it and I would just say we wouldn't have probably even put Lamb on our watch list until sometime around August and or September when it busted higher. Right here is a really nice gap, a big gap up,
Okay.
and I remember seeing this announcement, but we didn't jump into it. So
Okay, so let's leave it there if that's okay. I want to bring if there's anything else you want to add, or do you want me to turn it over to Alex now?
no, that's good.
Okay.
That's good.
Alex, sir, show us what's happening on your side. You're now presenter.
Okay, guys. So I have a few interesting stuff to show you. In addition to our last Wednesday webinar, I have clearly showed you why I didn't think that this B wave was over. It came in form of a triangle. So as we said, following the Elliottwave rules of a triple wave, triple zigzag, I have this as an A, triangle in B, and moving down in C. Okay, so you always need to pay attention to that's why I was so very suspicious that this correction was over, which we said on our last webinar. I was looking a little bit more for B on the upside, but actually this was a triangle in B, and I'm looking for a wave 1, 2, 3, 4, 5 to finish here, slightly, let's say after New Year. Okay, so if you look this chart, the top was December 2017. The lows was December 2018. It's a kind of a strange coincidence. And now we are in December 2019. So I'm looking a little bit more down. We might go to January as our FIB time ratio is pointing out, so that the next move up will be. But for now, for me, this is a clearly corrective pullback. And I'm waiting this triple zigzag to unfold with a little bit more of a wave 3, 4, and 5. And I'm looking to go long from 5,500 to 6,000. That's my zone, a FIB zone, a very well defined zone. And approximately from beginning of the new year until the 5th to 7th of January. That's my take on Bitcoin. I will show you one more interesting thing regarding relation of the S&P and Bitcoin. So as we can see, they're correlated. One interesting thing here was
so many people
really
will try to tell you they're not correlated, and I'm like, in which universe do you live? I mean,
yeah. Look this. For example, Bitcoin was falling down through all 2018. Okay, S&P went up. They both topped here. And then the S&P continue up. While the Bitcoin was dropping, then the S&P catched up. So for a while, S&P outperformed the Bitcoin, and then it rolled over and actually catch up this low. They both posted lows in the end of 2018. They start moving higher together, and they couple. S&P continues higher, like they decoupled here. And now we might maybe face the same situation that S&P catches out the Bitcoin here.
We didn't prep this part of Alex's call. I was wondering if you were going to say that, if that divergence is concerning.
Yeah, I mean,
go ahead.
Yeah, I don't know if it's going to repeat, but here there is a clear evidence with a little bit of lag, like we have it already for the last few months. The S&P catched the Bitcoin lower. So I'm just nothing's going on there. You know the famous GIF. Nothing to look for, guys. Move on, move on. But I'm just kind of flashing one of the things that also might happen here in the S&P, because it struck me yesterday when we had the blockchain member webinar how actually it worked, and it's repeating exactly the same now. They took off together, the Bitcoin followed lower, S&P higher, and in one moment they reached and basically made exact almost low together. So it's kind of an interesting analogy here. So if you look, their lows was actually almost on the same month, same day, same week at least. So that's very interesting. So I guess if this happens, we will have the repeat of 2018. Okay, so Bitcoin dominance chart, we are working up. Bitcoin is falling less rate than other cryptos, so we are looking a little bit more push down. And according to this chart, the alts will outperform Bitcoin in the first move on the upside. So we are also looking forward to that. If we cross this yellow line, this will make the satisfactory highs, so we can move wave 5 there, and then we're gonna look some alts to be long as well, because clearly we can see here that there is a potential that Ethereum of us or some other altcoin will outperform Bitcoin or raise in a greater pace than a Bitcoin in this first instance. As the Forex is concerning, I'm still looking these two wave counts on euro-dollar. We are starting to fail a bit in regards of the euro-dollar. So this is still a valid wave count. One more push down to this 786, 1.0769. RSI is pretty coming to nice levels. Doesn't mean anything or much, but it might be worth considering, especially if we have a risk-off event. Macron gap is there, so I've been looking for this target for almost a year or two, but euro-dollar was almost untradeable market because, as you can see, it's sideways. Bullish wave count needs to hold this area here. This is the bullish wave count. We came again to 200 moving average and we dropped back. As you can see, this moving average and this trend line held euro-dollar on the upside very successfully. Nothing new from new ECB President Lagarde on the last meeting. So it's a still sideways market. So I will not make any decision here. I have two wave counts. Which one prevails, I will put a trade in that direction. As concerned dollar-yen, we are still looking for a possible top here. In a risk-off, we are looking for a wave 3 down, 4 and 5 to this 96, 91 zone, which will be corresponding with the risk-off event on the S&P. So no changes there. Really pushing nicely to our short levels, a little bit more, and we're going to put shorts here for the possible risk-off event. FXY is still holding also our levels, so we didn't change much from the last week on that. So we are still kind of waiting 50 more pips, and we're going to put shorts there for this remaining move on the downside.
Yeah, guys, I can't understate this. Let me say that again. I can't overstate the importance of this yen triangle. You know, when FX market's moving, it's a clear, I think, leader to the other three major asset classes. Traded through the credit crisis of 06, 7, 8, and 9. FX was a key driver of the yen carry unwind. FX has been incredibly quiet. It's easy as an equity trader or an investor to forget about it or not pay attention. Right now, there is no reason, sorry to say, Alex, to pay attention within this range, but this range will not last. And when it does break either up or down, Alex is foretelling down. Selling of dollar, buying of yen is a deflationary play, and global asset managers who very quickly want to make a move, which FX markets, because the deep liquidity allows you to do, to adjust their position and to hedge or to hide out in the safety and liquidity of the yen, it will surely affect equities as well as fixed income and possibly commodities as well. So like, when that triangle breaks, you have to be aware as an equity trader. You have to just keep an eye on it. Keep up with what we're doing here. When it breaks, it will. I can almost guarantee it will impact your equity portfolio. So I'll just leave it there.
One more thing as well, Todd, is that this is also foretelling, if this wave count is correct, that we are going to go actually out of the large consolidations we had on FX for the last few years, which was basically untradeable from from the trading perspective. And if you see, we have a nice 5 waves move up, very discernible wave count, no doubt about it from any Elliottician. If this triangle resolves lower to this 61.8, which is the usual place, that means that this correction will be over, which very well coincides with your triangle.
Right.
And if we are looking at triangle to resolve higher in the S&P, it means that the managers will dump the Japanese yen and go for a dollar yen again. So I guess if we get this triangle there, the FX will move out of the ranges and we can be positioned on the bullish side for the next year or two on the dollar yen on the upside. So it rhymes well with the triangle.
Got it. Did you say the Rangers? Like the New York Rangers?
Yeah,
I'm joking. I love you, man. No. You said the New York Rangers. We're more of a Devils fan, I guess. No, that's good. That's super good work, and appreciate your look on that. And let's see. Let's just check not clients. Clients are coming up in 14 minutes. You people are friends. Just looking at any final questions here, guys. Robert, what is XLY, XLP? Does it look like a triangle to you? Robert S., friend, I know your name. Are you still in the webcast here? We'll take a look at that question. Any other question that we missed, guys? And we'll hop in there. If not, we're gonna wind it down here. The thing with the triangle, that's the most important chart I feel in this market. Perhaps if you didn't catch it, be sure to get the review. It's the predominant pattern that we're looking at. So is it a triangle? Yes, but only in the final, sort of the final part of this correction. So the final Y wave was a triangle. So I think what you're asking is XLY. Could it be? Yes. And we have the same count in XLY. We really need to hold 118 in order to fulfill being this 1, flat 2, up and 3. And then XLP, which is your staples. Staples are not sort of explained by that. It's a kind of a funky push higher. I don't think we could put that same WXY count on there. We have not looked at the XLP count, which is your staples, because there still is a pretty good bid into staples versus discretionary. And here's something that I was looking at reviewing yesterday, which is the value growth ratio. And I put this out to you guys a while ago. I still think we're seeing growth sell off relative to value. This is a ratio of IVW into IVE, which is the iShares growth and the iShares value. If you want to apply the Elliottwave count, traditionally the Elliottwave methodology would say you buy this product right down into this level, about 144. That's the point at which you sell growth and sell value by growth if we can get down into the support. So it's kind of a similar question. I think Robert was asking, look at XLY, which is discretionary, compared to P, which is staples. If we start to hold this support level, that's when I start to think that you will see XLY breakout. Growth will start to outperform value like we've seen through much of the last 5, 6, 7 years. But we're just getting a little bit of a pullback here. Your perfect buy zone is about 1.44 ratio IVW to IVE. And that's when I think you start to see that move towards 3,500, 4,000 in the S&P, which could be, next 24, 36 months. We shall see. So hopefully that helps. Okay, I see what you're saying, Robert. I'm going to leave that for another time. You're saying ratio of XLY, XLP. Let me do a little research on that, and I'll get back to you on that one, but interesting. Okay, guys, that's a long one. Hopefully that was enjoyable. Sorry to kind of hack it through our new setup. I'm going to kind of reorganize everything, but trading analysis team, great job as always. Viewers, if you don't mind, throw a little, hit that little thumbs up button on YouTube. Let Google and YouTube algorithm know that you're watching and you enjoyed this. Throw a question, comment, insult in there, whatever you please. This is the last show of the decade. Much more to come. A lot of exciting announcements in 2020, and everyone says that we have so much to come, but we truly do have a lot of.
Actually, we have one more year in the decade.
What?
The decade doesn't begin in 2020. It begins in 2021.
So 20 is part of the decade?
Yeah.
Oh, it's inclusive. Why didn't
That's
you?
what I.
Wait, hold on.
Yeah, the 21st century didn't start until 2001.
Okay.
So look it up. Google it.
Oh, man. How many times were you going to let me say that before you stopped me, Terry?
First time I heard you say it. So
wait a minute.
Read minds. I try to read your mind.
Bennett, what do you think about this?
I don't know. I think Terry's right.
I'm sure Terry's right. I'm sure he's right. I'm good.
Never mind, guys. If we think it's the beginning of decades, let it be. I mean, we live
I
in
am
such
a first-class loser. December 31st.
It is going to be the roaring 20s. Okay,
Pavaldi, did you know the decade didn't end in a week? Oh, he's got his headphones on. Oh, such a loser.
Yeah.
Remember, people on YouTube, how many people didn't know that? Right in the comments, how many people knew? I'm such a loser.
I didn't know that as well, but I didn't even think about it.
We celebrated Y2K, New Year's Eve, December 31st, 1999, thinking that we were going into the new millennium.
All right, hold on.
We were corrected.
Hold on.
It didn't really happen for another year, technically.
There's some debate about this. Some say the decade ends on December 31st, 2009, and start of the new one begins January 2020. For others, the new decade doesn't start until January 1st, 2021. The old one could. So this is according to the Farmer's Almanac. Well, I don't know.
Started by Franklin. It has to be right. Whatever it says.
And there's some interesting stuff. I'm going to completely blow this explanation, but isn't there like in order to take it to take the leap year, they had to shave like an average of a couple seconds off per year of the actual timing of the 365-day year in order to keep up with rotation, the Earth's rotation. Do you know anything about that, or did I just completely make that up?
I think the atomic clocks were reset.
All right, so that's the question. That's the final question of the decade. I'm going with the trading analysis decade. There's a question. Does the decade end in 12 days or 377 days? And the other thing is if our good friend Andrew Baptiste is on.
He's on.
He is. Andrew, the wedding looked beautiful. Congrats to Chelsea, your beautiful daughter. I've been looking at her amazing pictures traveling through Dubai and the Maldives, and the wedding looked amazing. So he's a good friend of the show and just a good friend of mine, good friend of trading analysis and the authority in our space. So congratulations to him, guys. Thanks for everything. I'm going with it. Happy holidays. Happy Hanukkah.
See you next year.
Merry Christmas. Everything, guys. Love it. Thanks for all your support. We'll be organized, I think, in the new year as we continue to push to new highs. So, Alex, Terry, Bennett, anything to conclude with?
Nope. Just
Happy New Year. And, happy holidays. And trade definitely got.
Celebration.
Say it again, Bennett.
Does it have a safe and sane New Year celebration, everybody?
Safe and sane. That's a good one.
Hope to see you guys back in the new year.
All right. Awesome. That was fun. Thanks, guys. See y'all. And members, we'll see you guys in about 8 minutes. See you guys.
Sounds good. Take care.
Take care.